Silver's had an epic run, going from 30 bucks an ounce to 120 US within a year or so. Now, it's had a bit of a pullback from there, which has some people saying that it's all over. Absolutely not. I expect silver to run past 300 US dollars an ounce. In this video, we're going to talk about why. What a time to be alive. I'm Sam Laurie. I'm the founder of Liberty Bullion. We're a bullion dealer here in Australia. We buy and sell physical gold, silver and platinum to the Australian public. Silver, let's get into it. Now, silver has had an absolutely crazy 18 months. At the beginning of 2025, it was 30 US dollars an ounce. It ran all the way to 120 over the next year or so and dropped like a stone, the biggest one-day drop in 40 years. Bit of a pullback, and here we are now. Now, the run isn't over. As I said in the title of this video, I fully expect silver to run to 300 US dollars an ounce, and it's all to do with the 45-year cup and handle breakout that we've seen in silver. Now, when we're looking at the breakout of a 45-year cup and handle pattern, we're looking at technical analysis. The other side of the story is fundamental analysis, and that's what most investors focus on first. That's the reasons why silver is going up over the long term. That's inflation, that's money printing, that's central bank monetary policy. That's all of these reasons why we're long-term bullish silver. Now, the technical analysis is charts. It's looking at chart patterns, chart analysis, what's happening on the chart. It's all about charting. Now, technical analysis gets very complicated very quickly, and if I was to run some sort of course on it, I would need an AFSL. So how do I communicate this technical analysis to you whilst covering my own ass legally? Let's have a look at a website. In researching this video, I've found an article that lays out the technical analysis reasons why I expect silver to reach 300. Now, if we have a look at this article from discoveryalert.com.au that was published on November 30th, 2025, let's keep in mind, everybody, that the silver price was under $57 per ounce US on November 30th. It says, silver's 45-year cup and handle pattern signals major breakout. That would have been some great information at $57 US, wouldn't it have? Now, going through this article, it talks about the technical foundation of these extended pattern formations, the 45-year cup and handle. The silver breakout cup and handle pattern differs fundamentally from equity market formations due to the underlying physical commodity constraints and industrial applications that drive the demand for silver. So in traditional cup and handle patterns typically develop over 6 to 12 months, but commodity markets can sustain these formations across multiple decades when fundamental supply-demand imbalances persist. What does that sound like? The silver market has had a 200 to 300 million ounce per year deficit for the last 5 years. Now, recent technical analysis indicates silver has completed a massive consolidation phase that began forming in 1980, creating what analysts describe as an unprecedented 45-year cup and handle pattern. This formation reached completion with a significant price movement on November 28th, 2025, 2 days before this article was released, when silver advanced approximately $3 an ounce US in a single trading session to reach the $55 per ounce level. So, key characteristics of this extended pattern include a rounded bottom formation spanning from 1980 to 2011, that's a 31-year cup phase, and the consolidation handle development from 2011 to 2024, that's the 13-year handle phase. The breakout confirmation above that critical 50 US dollar resistance threshold, and volume expansion during the breakout phase. So volume coming in a big way. Now, if we jump through to the end of the article and get to the measured move price projections, that's where things start to get a bit juicy. It says traditional cup and handle pattern analysis suggests that measured move targets based on the formation's height. So for silver's 45-year pattern, the cup height from the 1980 high to the lowest support levels provides the basis for upside projections. What does that mean? Well, conservative measured move calculations indicate initial targets in the 80 to 85 US dollar range, representing the minimum technical objective based on pattern geometry. Secondary resistance clusters emerge around 100 to 120 US dollars per ounce, where psychological round numbers may create temporary consolidation zones. This article was written on the 30th of November. The article was when silver was less than $57 per ounce. Then we saw silver run to 120 or 121 and turn around almost on the dot. So when this says secondary resistance clusters emerged around 100 to 120, where psychological round numbers may create temporary consolidation zones, that's all we're seeing now. Temporary consolidation. That's a key there. If we have a look at the extended scenario projections here, it says $300 to $400 range for the full cup height measurement, as well as $500 plus possibilities for inflation-adjusted historical comparisons. Now you can see here, the minimum measuring requirement for the cup and handle pattern suggests silver could reach $400 to $600 an ounce at a conservative estimate based on the formation's complete height measurement from 1980 to present. That's not me saying it, that's this article saying it. And this article got a few things right already. Now let's also include this next part. These projections assume the pattern functions according to classical technical analysis principles, where the breakout leads to price advancement equal to the formation's vertical range. However, commodity markets can exceed measured moves when fundamental supply shortages develop, as suggested by current silver market conditions. Well, that's exactly what we've got in the physical silver market, large supply shortages. So who's to say how far beyond that $300 level that we go on this bull run? So when I say $300 an ounce, that is my conservative estimate for silver. Now we've talked a lot about technical analysis here, which is what the video is about, the technical breakout and the measured move. But let's just quickly talk about the fundamentals for silver. So why is silver going up in the first place? Well, if we take the 1,000-foot view here, zoom right out and take a look at the economy and society as a whole, we're in a massive, massive debt problem. The US, $39 trillion in debt and going even further into debt. Australia, not very different. Japan, even worse than the US. The Eurozone, horrific as well with debt. There is no safe place when it comes to this debt crisis we've got across the globe. Now that debt problem has put us in a massive corner when it comes to inflation. So over the last 5 years or so, we've seen massive currency printing across the West, which has really pushed inflation up. But central banks can't raise interest rates as much as they'd like to control this inflation because of the massive debt load that we've got. We can't support paying 20% interest rates on the debt load that we've racked up, which means that central banks can't raise interest rates above the real rate of inflation. When they're stuck between a rock and a hard place, between debt and inflation, they have no choice. They have no way out. All they can do is print. Now, when they print, that pushes all commodities up, gold and silver included. Gold moves first, but silver moves further percentage-wise, which is why the vast majority of the precious metals that I buy are silver. Now, the million-dollar question is, when is this all going to happen, Sam? And the honest answer is, if I gave you a cold, hard time and date and a price that I expect silver to reach, and it did, the CIA would lock me up for time travel. But what I can do is speak to the time frame of this commodities supercycle bull market. Now, I recently did a podcast with David Bird, one of Australia's top technical analysts, and asked him the question, how long does he expect this commodities supercycle to last? Something that he said he expects it to last for at least another 5 years, but probably more like 10. And I'm in complete agreement with him.
I believe commodities will be very bullish, bare minimum up to 2032.
Right.
But I actually believe they're going to go much, much, much longer. We all know AI is going to drive the next multi-decade of growth, etc. Instead of trying to figure out what's the company that's going to be the one driving forward, what's the resources that are going to be needed in order to drive that, what's the infrastructure.
Now, I also did a podcast with Alex Scanlon, the CEO of Barton Gold, and he talked about how Australia is going to be at the forefront of this precious metals bull market.
I am very excited for Australia because, particularly given my views of how I think the world is changing and how I think that real assets will remonetize with inflationary factors and also industrial competition, countries printing money to get a hold of physical metals. What does Australia produce? Food and metals. whereas the US probably has had its best 50 years behind it, I sort of see Australia like 1970s US with this huge pathway of opportunity ahead of it.
Now, one last touch on fundamental analysis here. Let's take a quick look at the 1970s, which was the last time that inflation was as bad as it is today in the West. Now, in the 1970s, gold went from $35 an ounce in 1971, and it ran all the way to $850 an ounce by 1980, 9 years later. Silver did even better percentage-wise. It started out at just over $1 an ounce US in 71, and it finished up at $50 an ounce in 1980. That is a huge performance, 35x return in 9 years. Now, if you look back at the 1970s, you can see that silver didn't really start to kick into gear until the later part of that bull market. And every precious metals bull market is the same. Gold runs first, and then with a lag later on, silver outperforms. So if we look at the 70s, between 1972 and the beginning of 1978, silver went from $1.40 US an ounce to $5 an ounce. It tripled, which is a great performance, and maybe some people would have thought that it was over. Now, if you look at today as a comparison, over the last 7 years, silver's gone up just under 400%, which is not too dissimilar from the around 300% that it did in the 70s during that period. But what happened next in the 70s? Well, over the next 2 and a bit years, silver went from $5 an ounce to 50. Now, where are we today in comparison to the 1970s? Well, look, it's hard to say. History rhymes, it doesn't repeat. It's not an exact science, but what I would say, my expectation is that we've just entered the second half of this precious metals bull market, which is characterized by silver outperforming gold. So that's why I'm investing mostly in silver myself, and why I expect it to go to over $300 an ounce. What a time to be alive.